Hello and welcome to the HomeQuest Show. Today we're going to talk about refinancing. And one question that we get a lot is refinancing still worth it in 2025?
You'd think it wouldn't be, but yeah, it still is.
Yeah, and we're going to talk about the reasons why it's worth it. And we've helped people in 2025, we've helped people with refinances.
Oh, yeah.
And we've helped people save thousands of dollars. But we want to make sure that people understand this kind of a refinancing 101 of understand when it makes sense to refinance.
Yeah, and when you say thousands of dollars, you need to tell people that you have saved literally thousands of dollars
a month, too.
A month for people that are paying.
Yeah.
And we need to describe this and help you out.
Let's get into this. Refinancing 101. So we're going to talk about what is a refinance. What does that mean? When should you consider refinancing? What are the real benefits of refinancing? We're going to talk about this thing called the break-even rule, which is kind of tied into when you should consider refinancing, and then some common myths, objections that we hear, and a real-life story to help you guys understand how refinancing can apply to you. So a refinance, it sounds like this crazy term. It's just getting a mortgage, and it's replacing the mortgage that you have right now with a new one.
Right. There's two types of refinancing. It could be what we call rate and term, or it can be cash out. And depending on your situation, either one could help you. I have a situation right now. I'm working with an individual who bought a home a year and a half ago, and we did an alternative type loan, what we call a non-QM. And his interest rate was pretty high because we're using bank statements, and he didn't want to put a lot of money down. And now his equity has grown, and his home is worth more. He's done some fix-up, and we can do the same kind of loan and save him like $1,500, $1,600 a month. So it really will help him.
Yeah, and in general, if you can trade high interest rate for low interest rate, we're pretty big proponents of that. So when should you consider refinancing? The first one is the interest rate is what we're talking about. Is if you can save at least 0.5% on your current rate, that's when you should probably start running the numbers to figure out, okay, well, what's that going to save you per month? What's that going to look like? Now, the thing is, when you're refinancing your home, which again is just getting a mortgage, there's costs to get a mortgage.
Right.
And some of the normal closing costs that people will always have in getting a mortgage. We've got title fees, getting the title company to recognize this mortgage is tied to you and tied to this property. There's getting the taxes and the insurance set up. Not always, but typically that's part of the process.
Getting it transferred into the new lender, they're servicing, and so you got to set up the escrow accounts and make sure everything's set up.
You mentioned a lender. Sometimes the lender wants to verify that your home is worth what you think it is, or whatever, so they'll require an appraisal to be done when there's a cost to that. So we talk about if the break even is under 24 months, and I'll have another slide on that, but those kind of go hand in hand, that when you refinance a home, there are going to be costs associated with that. And we want to make sure basically that the costs aren't too high.
Well, I see that you've got their break even under 24 months, and that's kind of our goal, I guess.
Yeah.
It's not necessarily needs to be your goal. I think VA says it has to make sense within 36 months. So there's different criteria, but I always like to say if you can break even within 24 months, to me it's a no-brainer.
That's no-brainer territory. Now, the funny thing is we go one point down, point 3. It doesn't make sense to refinance a home if you're going to move soon.
If you're going to move in a year, you may not want to even think about it.
Yeah.
So,
save some money set aside. And kind of to break down, there's different goals for different types of refinances, and my dad talked about some of them. The rate and term is we're just going to lower the interest rate. And then the term, you can actually change the terms of your loan as well. If you've been in the home for 30 years, not 30 years, if you started, typically loans are 30 years long, but if you say, you know what, I'd rather have a 20-year loan.
So if you've been in the home 5 years and you want to pay it off in another 25 years, we can do that. That depends on your preference. Or we can extend it out to 30 years and keep the payment lower. It just depends on your preference.
Yeah.
That's a preference type thing.
Yeah, and then the last example is the cash out refinance. Basically, if you need to pull some money out, and there's a lot of different reasons why people might want to do that. Maybe working on a remodeling project for their home, or they're trying to pay off other debt, credit card debt,
Right.
things like that. So, these are kind of some reasons why you should consider refinancing.
Right.
And then, some of the benefits, and again, it depends on why you're refinancing. With the rate and term, we talk about, one, you can lower your monthly payment. Two, the second one is kind of a unique one that maybe will go over a lot of people's heads, is you can remove what is called private mortgage insurance.
So anytime you're buying a house and you're putting a low down payment, 5%, 10%, 15%, anything under 20%, normally, if it's a conventional loan, will require a mortgage. They call it private mortgage insurance. And that mortgage insurance doesn't help you at all. The mortgage insurance is for the lender, and it's an incentive for them to give you a lower down payment. In return, you buy this mortgage insurance that says, well, if I don't make my payments, then this mortgage insurance will pay back the lender for any losses they have on the first 20%, 25% of the value of the home.
Yeah. So as you own your home over time, homes tend to appreciate in value. And as homes appreciate and as interest rates come down in the market, you can gain equity, or you can be able to refinance and remove the mortgage insurance. Yeah,
but going back to this mortgage insurance, it can be, if you put 5%, even 3%, it can be $100, $150, depends on.
It can be pretty expensive.
It can be pretty expensive,
yeah.
And if your value has increased and we can drop that off, that's $150 right there. And then maybe the interest rate's gone down a little bit. Then we're talking.
Saving on the mortgage insurance and saving on the interest rate. The other one is switching your loan type. Basically, if you had an adjustable loan, you could switch it to a fixed loan. If you any type of loan, if you had an FHA loan, a VA, whatever loan, you can switch the type of loans by refinancing. Again, we're just replacing what your current mortgage is with a new one. With the cash out refinance, we talked about this a little bit. Consolidate high interest debt. High interest debt, a lot of people don't know that credit card debt is typically in the 20, maybe 18% to 28% interest rate range. In the last couple of years, it's been pretty high. And so if you can trade that debt with a lower, instead of paying that debt at a 25 or whatever percent interest rate, whatever your credit card interest rate is, and trade it for the mortgage interest rate of 5, 6, 7%, that is so much interest, so much payment that you're saving per month.
So if you pay your credit cards off every month, then this is not going to apply.
It doesn't matter,
because the interest doesn't kick in. But if you're carrying a balance on your cards and you do want to pay them off, it's very difficult to pay off a high interest rate credit card very quickly. But if you convert that into a lower payment or a lower interest rate, home equity line, and you can always pay in advance, you can pay more, you can pay those off fairly quickly.
Yeah.
So that's where you make out right there.
Yeah. And then other things you can do, a cash out refinance, so you have money set aside so you can invest it in something, or invest it in your home by renovating your home, remodeling your home, making it worth more. And then the last couple we have, if you're getting divorced, you might need to buy out your spouse or soon to be ex-spouse for the money, the equity that they have in the home or whatever. So there's all sorts of reasons why people refinance their home. And then to go back to the break-even rule, and I guess maybe I should have put this earlier, but this is basically how it works. Is there's going to be costs associated to refinancing your home or getting a loan in general. It's the same as getting a loan.
Right.
And then there's going to be savings per month. And so that's how we figure out is if the savings per month divided by the cost is less than 24 months, then that's where we start to get into, this is kind of no-brainer category. You should probably refinance, unless you're going to sell your home in sooner than 24 months. So yeah, that's the break-even rule. That's the break-even point. And then some common myths, some kind of common objections that we've heard. One, it resets my 30-year term. And the truth is, you don't have to have a 30-year interest. You can have 29, a 28, 27, 20.
Any increment of one, we can't do 29.5
right.
year loan. We can do a 29, we can do a 28, we can do a 27, all the way down to, I think
it's like an 8 or something.
8 years.
Yeah.
Yeah.
So, and the other thing I really like about this is, let's say you're comfortable with the interest, with your current monthly payment, but interest rates come down. What you can do is say, let's say you have a 30-year loan, as you take more and more time off of it, so make it like a 25-year loan. If the 25-year loan matches your current monthly payment, you could swap your 30-year loan for the 25-year loan and say, well, I'm comfortable with this payment.
Save 5 years.
And now we're going to save 5 years. That's 5 years of interest payments that you've been making. So there's a lot of flexibility. The other, common objection that we might hear is closing costs are too high. And it's like, well, there's closing costs, and then there's the cost of the interest that you're going to be paying over the life of a loan.
Right.
And that interest, it adds up. Like when we calculate the numbers, it can save people like $100,000 to refinance just by, a 0.5% lower over, amortizing over 30 years.
It can save a lot of money. And I think one of the things where people get confused is on these closing costs are too high. In the escrow accounts, we're asking them to set up, 1 year of prepaid insurance and 6 months or 9 months of prepaid taxes. Well, that's not a fee to us. That's paying your taxes. That's paying your insurance. And then once the transaction closes, whatever is in escrow at your present mortgage company, you get that back.
That's your money.
It's your money. It comes back to you. So a lot of people get that confused. They think, closing costs. The prepaids are not closing costs in my mind. It's the cost of us, the lender, the title, the appraisal, those kinds of things. And that's what we need to focus on.
Yeah. The other common myth and objection that we'll hear is, as if anyone could predict where the market will go. Well, they'll say, well, rates are probably going to drop more. And that may be true. The thing is, we want to make sure you're aware when it's no-brainer refinance time.
Right.
Because even just recently, and I'm not going to say the date of this, but just recently interest rates
did drop.
They dropped significantly, and they've gone up a bit.
Yeah.
But when they dropped significantly and reached out, there's been times in my career where they'll drop, and there's like a 2-week period where it's like, hey, you should probably consider refinancing. Let's lock this in. They say, I'm going to wait until it goes even lower. And then it goes up, and it can go up for 6, 7, 8 months. And now there's like this cost. You're paying an additional $200, $150 a month when you could have just saved right here and then, and it would have been worth it to you then.
Yeah.
And if rates drop more, then you can always refinance again, and we'll let you know when it's a no-brainer.
Yep. Good point.
Let's see what we got on our last slide. Okay. This is actually, there's a lot of stories. I've helped someone. I'm going to tell us the second story, but this first story is a past client that he called me off of a postcard, and I helped him with a loan in the past, and then he called me again. Yep. And he had more credit cards than I've ever seen in my career, and I think close to what you've seen in your career.
It's one of the top. Yep.
And we're talking like in the 20s credit cards. Mm-hmm. And by helping him, we didn't do a refinance on his home. I guess what we did was a home equity line of credit, which is treated pretty darn similarly. Pulling money out of your home to pay off other debts, kind of that debt consolidation, like a cash out refinance. And by doing that for this gentleman and his family, we saved him $3,000 a month. More than $3,000 a month.
Yeah.
Which is life-changing because he had taken on a second job. He already had a full-time job. He took on a second job, a second part-time job to make $3,000 a month to pay for all this. It's like, I just saved you that 25 hours a week by refinancing you. Which is fun. The other one, when I first got started with my dad, we were sending out flyers and helping veterans, and this lady called me off the flyer, and we could save her $766 a month. And to me, the reason why this was so cool was she is in her 70s, wanting to retire, and I got to, they were like too old to understand how to use electronic signature and uploading documents.
You were making home visits.
So I had to go make a home visit, and I go in their home, and in the wall of this veteran's home is all these awards that he's received. He was a Green Beret in Vietnam. The guy's like in his 80s, and I could tell this guy could beat me up still, like just this little mighty mouse. But these people work so, like, you get to change people's lives, and they work so hard, and to be able to retire this woman was just an incredible honor to have. And again, so many people aren't aware of how interest rates and refinancing can help them
change their lives.
A lot of loan officers, a lot of people think that loan officers only help you buy the home, and maybe some do. For us, we don't want to help you just get into the home. We want to help you pay off debt. We want to help you use it as a tool to pay the least amount of interest possible in your lives and help you have a comfortable life. So yeah, refinancing is a huge deal, and an awesome tool for people. Right. And when a loan officer reaches out to you, especially when we reach out to you and say, hey, you should probably consider it, you should at least consider it, at least have a conversation with us or whoever you're working with to find out what the benefits are.
Well, everybody's different, and they all have different goals. So we respect that. That's not an issue. So, but yeah, we're here to help, not to hinder, and hopefully we're perceived that way.
Yeah. So thanks for watching. And again, if you have any questions about refinancing, please don't hesitate to reach out. Start your home quest.